A very good afternoon to everyone here on the webinar. Thank you all for calling in the middle of Tuesday. So welcome everyone to our Market Trends and Data Insights webinar. And in particular, today we'll be focusing on the Hong Kong webinar. So my name is Dominic and I'm from the Cowork Intel team. And in particular, I'm focusing on the Hong Kong and Singapore markets. And in today's webinar, what we actually want to do is to look at what our data is showing in terms of the flex workspace market and how as operators, you can use this data to run more efficient operations with clear and measurable results. So today we are actually joined by two distinguished speakers, James Rankin and Lawrence Edwards. And right now I'm going to introduce them a bit. So I'm not sure if James and Lawrence, you would be able to turn on your cameras. Hi, James.
Hi, Dominic.
Great. Yeah, so James Rankin is the head of research and insights at the Instant Group, and he has led the Instant's research team for the past 6 years and specializes in using instant and industry data to help bring clarity to the flexible workspace market, helping operators of space, asset owners, and investors to understand market trends and identify areas of opportunity and risk. And Lawrence is the head of sales for Cowork Intel, which is part of recently acquired by the Instant Group. So as part of the partnerships team, Lawrence drives the growth and user adoption of our innovative data and insights platform, Cowork Intel, to increase data transparency across the global flexible workspace industry. So without further ado, let's welcome James Rankin to share with us what the data is showing about the Hong Kong flex market. James, over to you.
Brilliant. Thank you, Dominic. Yeah, you can move on to the next slide. So thank you, everyone, for joining today's session. In a market that continues to become more competitive, and I hope you'll agree that that's the case, making informed decisions when it comes to sort of asset performance, location opportunity, assessment, and asset underwriting, I think only becomes more critical. And that's certainly what I've seen over the last couple of years in terms of demand for data to support those activities is dramatically increased. Within the flexible workspace sort of world, I think getting clarity on market data from a sort of broader perspective has always been challenging. You've had informal groups, been set up. Mystery shopping has tended to be sort of the main route for information. And I think that has served a purpose, certainly, but is not the best approach if we look at other industries and the type of processes and systems that they put in place. Ultimately, not only has helped those sort of internally, but has also helped bring finance and investment into the industry. So Instant sort of increasingly strive to provide some clarity. But I think, we've always maintained a letterbox view of the industry based on our own data. And therefore, we've taken that decision to work with the industry to introduce more of a combined or holistic approach that we hope will improve the ability to make informed decisions, increase investment into the industry, and ultimately support a smarter working world. So today, I briefly wanted to share some of the trends that we're seeing within the market, using sort of both the primary research that we undertake, but also the data sets we have within our business, before passing over to Lawrence and the Cowork Intel team, who'll give more of a detail on what we're trying to achieve and the platform that's being built, and hopefully the conversations that Lawrence and the team will be having with some of you this week. So Dominic, if we move on. So I think, unfortunately, and this isn't just, within Hong Kong, but globally, demand sort of remains below levels that we've seen in previous years, certainly within the flexible workspace sector. In Hong Kong, we've got reports of up to sort of 13 million square feet of traditional space now sitting empty in the market, a figure that was relatively unheard of a couple of years ago. And I think employees are still reticent to return to the office, certainly based on the research that we've been doing. And I think while there are individuals and areas of the industry that are doing well, overall, the market's quite tough right now for the majority of operators and providers of space. That being said, there is positivity for future. I think firstly, while Hong Kong sort of office return may be slightly lower than in other or slower than in other Asian markets, it's well above Western levels. You know, and in West, to give some perspective on that, in Western levels, if you talk to a business and they say that, you know, their office utilization is at 50%, they're happy about that. They see that as a good thing right now, particularly in markets such as the US. And I think, you know, this is an indicator that in the traditional office sector, at least, we are seeing increased vacancy rates, simply due to two reasons, really: surplus space. Most companies, a large percentage of companies, have realised that they have surplus space, and also the focus on cost cutting, and the realisation of how expensive real estate has become to their business over the last couple of years. So, you know, for the flexible sector in Hong Kong, I think these factors, while challenging right now, will lead to long-term growth. And actually, we've seen a recent uptick in demand, which is showing inquiry levels match those seen in early 2021. That's highlighted in the Co-work Intel platform, and also the instant data, and that indicates a very strong end to the year, despite sort of a challenging first half. So we are increasingly positive about the Hong Kong market. We're forecasting that at sort of a total market level, around 1.6 million square feet of flexible space will be acquired this year, within Hong Kong, of which around 10 to 15, potentially up to 20% of that will transact, and come through into customers, real customers in the market. Where this demand is expected to come from, I think, is really important to understand. Traditionally, within Hong Kong, we've seen sort of a relatively even split between the different sizes of requirement. Over the last couple of years, the larger requirements have dramatically slowed, certainly from what we're seeing, and this has created quite a challenge, I think. We expect that this is ultimately been due to sort of less certainty from those large businesses about their future strategy, but also increased incentivization from the traditional sector, which we see time and time again starting to make the decision more challenging for occupiers when it comes to adoption of flexible space. Thankfully, this trend has sort of reversed in the last quarter, with the most recent data showing quite a large, actually, resurgence in demand for larger requirements. Over 45% of all sort of recent demand is now from occupiers looking for sort of 25 plus desks within Hong Kong. So what does that tell us? Well, it tells us there's very positive signs. Larger occupiers are starting to make decisions rather than sort of sitting on the fence. The incentives that traditional landlords are offering are maybe not stopping those occupiers quite to the same way in their adoption of flex right now. And I think, layering on top of this, we are seeing an overall rebound, I should say, sorry, if I can speak, rebound within the data. And this is indicating, albeit in small levels at the moment, that 2024 will be an even stronger year. And we're expecting upwards of 2 million square feet of demand, new demand landing into the market, as I say, of which we expect sort of 10 to 15% of that to transact. So, Dominic, if you want to move on to the next slide. So, while APAC as a whole has bounced back relatively positively, as I mentioned, sort of in regard to return to work, certainly compared to those other global markets, there are challenges when it comes to occupiers sort of realigning their workplace strategy with new business needs. And we recently conducted some research with the Urban Lands Institute, or ULI, to identify what those challenges are, really with the aim of helping bring sort of some insight to providers and the industry around where the challenges are, and therefore what potentially messaging or activities can be undertaken to try and sort of meet some of those short-term challenges. Within Asia Pacific, it's probably unsurprising that cost came out as the most, or the number one challenge or the top priority for occupiers. Well over 30% of occupiers saw that as their number one challenge or top priority when it came to sort of driving office strategy going forward. That is around ultimately, can we as an industry help show increased utilization, help companies reduce their overall footprint and therefore lower costs? I think that's the angle that the industry ultimately can be picking up in the short term and running with. something that the traditional sector is still not necessarily talking about. I was at a conference with some very senior industry leaders last week, and there was discussions from some of the bigger agents there talking about that actually people are now taking more space than ever before. And it was sort of laughable because that's the complete opposite trend to everything that we hear from our clients, but gives an indication that many sort of people with very traditional backgrounds still are kind of continuing the traditional messaging and thought process that has been in place for many years. Measurement of utilization of the office, I think, which is being used as a stopgap measure to sort of represent productivity, is highlighted as equally important, or nearly equally important. We saw that as the sort of second priority when it came to driving ongoing sort of flexible workspace strategy or office strategy. And I think easy to use utilization data here with insight to help occupiers understand how their company is performing versus sort of other occupiers within that space is again something that, while not easy to deliver, is certainly an option. And there is technology and platforms. Many of you will have some form of that already within your businesses, but just helping those leaders understand what their business is doing versus it doesn't need to be their competition, but just their peers, helps kind of give them some context on, is it good or is it bad? And ultimately, that's what most people seem to be crying out for right now, which is, how am I performing versus others in the market? And then finally, around sustainability, I think a topic that receives mixed focus, and it is expected to become more important over time. In the UK now, large corporates consistently now sort of look for space that can not only deliver data on their usage, but also helps sort of them work towards their embodied carbon targets. And sort of environmental and sustainable factors were highlighted as the third priority by, again, over 30% of the industry. And we see, I think, while we see this trend being slower in terms of uptake in APAC, the research clearly shows that, it is becoming something occupiers think about at the moment. If we move on to the next slide. So despite the challenges that I've mentioned in both sort of flexible and traditional that are related to those changing needs, rates across Hong Kong that we've seen certainly appear to have remained relatively stable. And this is a graph that I've taken out of the CoWork platform. At the lower end of the market, co-working desks appear to have dropped slightly across the city. I think that's due to the transactional nature and this area of the industry proving kind of challenging to make profitable in isolation right now. And then, as in many other global markets, premium space, it remains a draw and continues to drive sort of that occupier demand. It's what occupiers are looking for in terms of space that excites employees and gives them a reason to come into the office above and beyond just sort of the traditional metrics. And I think that's one reason why we've been able to see sort of a higher end of the market maintain its overall rates far better than in other areas. And then in recent months, we have started to see declines in the mid-range of the market as market conditions start to bite. Again, I think this is a trend that unfortunately is familiar for many operating in places like the US or even in cities such as London. Spaces without that very clear value proposition or differentiating brand are starting to find it difficult, I think, to secure new customers as that competition increases within the market. So if we look at the final slide, in no other market globally does location play such an important sort of role in establishing rates. And I've just given you some examples here of the different achieved rates that we see within sort of Hong Kong as a city. And I think while rates at an average level have stayed relatively stable, despite those tough market conditions, there is very limited growth happening in the market. And that's ultimately a challenge given increasing operational costs that we hear and we're told about. I think equally in certain areas, particularly those in sort of slightly less central locations, we've seen rates start to decline in recent months. And I think being able to look at sort of this in granularity, rates, demand, competition, occupancy, from our perspective, we hope that and we hope you agree on that, but it takes data from sort of being a nice to have to helping you contextualize broader market trends to something that is very specific to you and your business and allows you to make slightly more informed decisions. And that's ultimately what Cowork Intel is there to do, which is to give more granularity to you. So I'm going to hand over to Lawrence now to walk through, that platform. And while we do that sort of transition, I wanted to run a quick poll, which I'd love you to, if you can take part in. And the question really here, and Dominic, if you can run the poll, is, where do you see market data adding the most value to your business? And as I said, I'd love you to, if you can give us an indication of which one of these options do you see data giving you the most value. So we've got optimizing performance of existing locations. We've got identification of expansion opportunities. We've got supporting investment and financing, which we've certainly seen a big area kind of come through recently. We've got landlord negotiations. We've got customer acquisition and retention. Then we've got sort of all of the above. So at the moment, I think what we're seeing is kind of a polarization between two leading areas. We've got optimization of performance of existing locations, which again, in tougher market conditions, I think is something that we see a broader increase in interest in. And then we've got customer acquisition and retention. So being able to be confident when you're talking to new customers or existing customers that the rates that you're offering or the product that you're offering is in line with the market, and being able to either hold firm on your rates, or if you're seeing market conditions change, react to those and remain competitive in a market such as this, again, is really important. So I'm going to pass over to Lawrence now to take you through Cowork Intel. Thanks very much for the time. And if you have any further questions, please don't, feel free to reach out through via Dominic or Lawrence, and we can chat further.
Super. Thanks, James. Well, it's great to be here in Hong Kong this week, and I really look forward to meeting many of you over the course of the next few days. Now, from Instant's deep involvement in the flex market, what we are finding is that there has been a growing appetite for more and more transparency into what is happening, but also how that market is changing. And given the strength of our connections and the breadth of our expertise that we have, we consider ourselves to be the best placed company to help the flex workspace market grow and drive the industry forwards by providing valuable data to operators and landlords across the globe, but especially in mature markets and competitive markets like here in Hong Kong. And while competition in the market is intensifying, surging demand for flex workspace remains full of opportunity. To be successful, what it requires, though, is decrypting a relatively complex market and making informed data-driven decisions. So what we've done is, in November of last year, Instant invested into Cowork Intel, and since then we've made significant developments into the platform. We've ingested all of the Instant transactional data from 2015 all the way through to today. And as you'll see in a moment, what the platform provides is cleansed, aggregated, and anonymized data around pricing, occupancy, and demand levels, allowing the market to make informed decisions on their business. Now, with the market that we currently have in Cowork Intel, it is the most comprehensive data and insights platform for this market, and operators have been able to generate 5% or more profitability and also save a significant amount of time and money from using processes such as mystery shopping. The Cowork Intel platform gives you the knowledge that you need to optimize rates, maximize occupancy, and underpin growth opportunities into new markets. Our overall ambition and vision with this platform is to help create a smarter working world for everyone. Now, before I launch into giving a quick demo of the platform today, we've got one further poll that we would like to run, and it'd be great to get your input on. So Dominic, if you could just quickly share that poll. Thank you. So the poll here is, what data do you commonly use or look for when assessing an asset, so one of your existing sites' performance, or selecting assets for expansion, so looking into new locations. Is it demand, occupancy, or perhaps desk transacted rate data? Is it square foot transacted rate data, competitive profiles? Do you use Google to search for information? Traditional real estate costs, OPEX costs, or other? So it'd be great to see what's coming through so far. Again, interesting, a bit of a mixed bag. People are using transacted rate data on a square foot and square meter basis, competitive profiles, and someone I think also indicated that they use OPEX cost data as well. Okay, well, I think that feeds nicely into the what the platform provides. So let me just share my screen now. There we go. So this is the platform of Cowork Intel, and what this contains is aggregated and anonymized data within the flex workspace market. So what we've got here is, just to give you a bit of an indication, we're actually running a pilot over the course of the next 6 months for all Hong Kong-based operators, and we're giving them an exciting opportunity to contribute their data and in return gain access to the platform's data, which, as I say, is presented in that aggregated and anonymized format. Whilst we are running the pilot, there will be no cost to operators who contribute their data. And during that time, we are going to be engaging with operators, both large and small, as many as we can, to build up a really comprehensive picture of what's happening in terms of pricing, occupancy, and demand. And our initial aim is to get a 30% representation of what's happening in the market. And we will be significantly investing into the platform during this time, so that we make real developments on the overall value proposition. The key improvements we're looking to make are twofold. One, around getting greater breadth and depth of data on the market, and secondly, to provide valuable insights and reports which will be layered on top of the data. But I guess most importantly, we'll also be taking on board all of your feedback so that we can make continuous improvements to the platform. Now, we've already onboarded a number of operators in Hong Kong, and it would be great to have all of those that are on this webinar on board as well as the rest of the market. Just to give a bit of an indication, now we've been running a pilot over in the UK since around July time, and we're running it across key hubs across the UK. And we've been able to build up a really comprehensive picture of what's happening on the ground across key districts and submarkets in terms of occupancy, demand, and pricing levels. But we've also had brilliant feedback from the market so far, and that operators have been able to use our data to benchmark and adjust their pricing to improve their occupancy across their sites. But we've also had a number of operators use the platform to assess new markets to enter into as well. So what we can see already from the platform is that the average achieved monthly rate per workstation for the last month was 3,738 Hong Kong dollars. And the demand levels have dropped off slightly from last month by 7.4%. And the spread of the data comes from not only Hong Kong Island, but also on Kowloon side. And that's spread across over 236 sites, of which we'll have multiple transactions at many of these locations. So we've got already a really solid sample size. And what you can see here is the achieve rate by desk we've been able to track from 2015 all the way through to today. Now, one thing that many operators are finding really useful when they share their data is that their data is actually layered on top of these data points. So you can see, I guess, against the broader market, how you're comparing directly alongside your peers. And therefore, you can then think about adjusting your pricing strategy accordingly. So we've also got that pricing broken down on a square foot basis. But at the same time, we've also been able to extrapolate the data based on the achieved rate per workstation by occupier profile in terms of the number of desks that an occupier may have secured. Now, the bits of feedback that we're hearing on this particular data point is that it's really useful from a renewal perspective, so that when operators are engaging with their occupiers, they know how to price accordingly. We also have further granularity in terms of the number of the deals that have been done by side in terms of the number of desks. Now, it looks as though there is quite a large chunk of the market in terms of flex here in Hong Kong at the 1 to 2 desk size, and also the deal profile by initial contract length. So it looks as though there are now fewer deals being done for under 3 months, and an increasing number of deals being done at 7 to 12 months, which is an interesting change that may be taking place. We also have an overview of the tenant demographics by business sector. Many operators are saying that this is actually really useful from a marketing context. And then we have a demand graph, which just paints a picture of how the market is performing in terms of the number of inquiries that have been received versus the original point of when we were collecting this data back in January 2019. So you can see it is sitting at 91% versus 100% when we first measured this data back in 2019, and it really hit a bit of a dip, which is no surprise, off the tail end of COVID, but it's really started to gradually pick up since then. We've then extrapolated that same data point out by the estimated level of inquired desks in square feet, and also the inquiry by requirement size. And then penultimately, what we've also got here is the new location hotspots by unserved demand. So that gives basically an indication of where we as Instant have received a significant amount of demand, but there isn't enough supply in these areas. So Tsim Sha Tsui, Central, Kwun Tong are indicates that they're the top 3 locations. And this just gives a flavour for all of the locations through which we have data within the platform for Hong Kong. So we also have additional data points in the platform around supply, but also publicly available data that we've been able to source based upon advertised pricing, and also social media data as well. So that gives an overview of Co-work Intel, and Dominic will be following up with all of you who are joining us on the webinar today to make sure that we can get you on board to the pilot, but also answer any of your questions, unless you have any today. So we just maybe give it a minute or two just in case anybody has any questions for any of us today. Maybe anybody who's got any questions, feel free to pop them into the chat, which I think is at the bottom of your screen. Nope. Okay. Well, that makes life a lot more straightforward. I'll leave it to Dominic to maybe wrap up and say a couple of further words.
Yeah, thank you. Thank you, Lawrence and James. Yeah, for bringing us through. I hope that was a really informative session about the Hong Kong flex market and what we see the data talking about in terms of about the trends looking forward for 2024. So if any of you have any more questions, or if you'd like to find out how you can get on this pilot, we'll be happy to share more and to follow up over an email. So last call, if there are any questions from attendees about Co-work Intel or about our platform. Okay, we have one question. Not sure if Lawrence or James wants to take this one, but it goes, how do operators decide on new expansion sites in the market?
You know what, it's a great question, James. maybe you can jump in as well after me if you've got any further points to add. But we are finding one of the key use cases for Co-work Intel, having launched this already out in the UK, and we're beginning to do the same out in the Americas, is that they find our data really useful to understand the dynamics of what's happening on the ground. Again, from a pricing demand, but I guess really importantly from an occupancy perspective, before making the decisions to assess new markets to enter into, or even if they have a particular site in mind, they're utilising the data to help justify part of that decision as part of a broader due diligence process. James, anything I may have missed there? No. Okay.
No.
Next one. How do we keep the data confidential? Really, really important one as well. So what we are making sure, and this is really important, is that all of the data is sent directly to the team securely on the Co-work Intel platform, typically via a property management system or operating system like sort of Office R&D, Nexus, etc. And it's all transferred securely to the team in Co-work Intel. The data is never made available in that format to the team in the broader Instant business or our respective shareholders, and it's all then aggregated and anonymized as well. So any one particular operator, if they were to share their data, you wouldn't be able to visualize it within the platform on a standalone basis. There always has to be 4 or more contributing operators within a specific geography who's sharing their data. And then the couple of other questions coming through. How are operators deciding each centre's per person rate? James, I don't know if you've got any thoughts on that one at all.
So, I mean, I think the thing in terms of
for some reason you're on mute. Oh no, it's me, not me.
So I think that the thing that we're seeing from using a data perspective is looking at what your product is. So firstly, understand obviously the product, then using the data to understand sort of what your competitive set is charging. And then I think while we can never tell you or advise exactly what rates you should be charging, we can at least give you an idea of what rates are being commanded in the market right now and what direction that's going in. We can also help sort of you understand how competitive the market is in terms of, looking at occupancy rates, how much capacity is there. And those things, combined, certainly when we've been working with clients, can really help them understand where they're positioning their business. So an example would be, if we know the market's very competitive, so there's quite a lot of capacity at the moment, and we see rates on a downward trajectory, and there's headroom, or there's enough profitability within a specific centre that we're working with in terms of their rates and their margins, then they may choose to be slightly more aggressive in their sort of discounting to secure a client. Equally, if they feel that actually that they're very confident in their product, and they don't want to, introduce that discounting, which we are seeing companies make that decision, then again they're able to communicate that with their sales teams and be really firm on, no, we believe in what we're doing in our product, and this is the right rates for us. But at least it allows them to make that sort of informed decision. And again, in markets that are sort of becoming more positive, and we're seeing demand growth, and there are increasing numbers of that as I say coming through the back end of this year, the market's starting to rebound. It works in the other way. So being able to increase your rates or be more assertive when talking about rates with potential clients or existing clients, because that demand is increasing, there's a lot space is becoming that less space is available on the market. So again, it's helping rates, allowing you to drive rates back up as the market rebounds over the right time period.
Great, thanks, James. Next one, if there is a location that doesn't have a big operator presence, would it be easy to tell who is who? So I guess it depends if we're looking at this as an overall citywide basis or if we're zooming into a particular sub-market. But again, the way that this business model, this platform is configured is that it will only the data is all aggregated and anonymized, and we're only able to surface the data when there are 4 more contributing operators within that specific geography. So if there's simply not, we wouldn't be able to surface any of this data. That's a good point. And the next one, we're seeing a very competitive market right now. How would both Co-work Intel and the Instant Market Insights help operators practically? Well, I think, as I was saying, perhaps at the beginning of my overview, there are a number of operators that are getting a feel for what's happening in the market based upon their connections that they may have with both other operators or with brokers and agents, but also having used mystery shopping. Now, how accurate that data is and how reliable it is another question. That the beauty of this platform is that it's all based upon actual transactions that have taken place and real occupancy levels. So therefore, what operators can know is that when they're utilizing it, it is accurate and it's up to date and reliable. And in terms of the insights, James is probably better placed to jump in on that particular point.
Yeah, I think it really comes down to sort of benchmarking when you have an existing asset or space, that asset's performance versus market trends. So that can, as I've sort of already mentioned, allow you to work or look at your pricing strategy. It can allow you to understand if, from looking at the demand volumes coming in, if it's the market that is down or if it's your product or space that either isn't receiving the same volume of demand. So maybe it's positioned the wrong way, or the marketing channels aren't working strong enough. Or if you're seeing that demand come in, but you're not seeing those transaction volumes close, then it may be that you can identify that there's potentially a challenge in the sales process. So it's just about giving you more visibility on what is happening within your business compared to the broader market. And I think when markets are challenging as they are right now, it's giving you that confidence to identify where some of the challenges are, as I say, are they internal or external, and respond to those. It's not going to give you the perfect the perfect answer or the silver bullet. Ultimately, every business is slightly unique, and your business is better than anyone else, but it will help you identify hopefully where those challenges are, and then allow you to kind of quantify what those look like.
Completely. And then one final question that's come through is, can operators see other markets, i.e. other countries' data? For example, an operator here in Hong Kong, can they check the market in what's going on in Australia? The answer is absolutely yes, and that is one of the key use cases, as I mentioned, to assess those new markets where they may not necessarily be based, but they want to utilize the platform to understand what's going on the ground in potential new locations. Yep.
Okay. Cool. So thank you everyone for the questions. I think there is a real demand for looking at how such data could help operators, both in Hong Kong and as well as the other markets that we're operating in. So as mentioned again, Lawrence and we are happy to meet with you to share more about our platform, as well as this pilot partnership that we're launching in Hong Kong. So if you have any further questions, please feel free to reach out to us. We will send an email after this to follow up with the recording, as well as an opportunity to link up if you're keen to get on board this pilot program. So once again, thank you, Lawrence, James, and everyone involved for coming in for this webinar. And I hope you enjoy the rest of your week ahead.